Joining us now, former Federal Reserve Governor and CNBC contributor Frederick Mishkin to break down this and many other things. It's good to see you. Rick, and you, last time you were on, I remember well, you're pretty hawkish. You think we should skip, but you think another one is inevitable eventually, or is it a mistake to skip? Should we just do it right now?
No, I'm actually on board with skipping right now. That I think the Fed is basically in a good place. They've done something that was very important, which is going back a little bit, which is they had these very rapid rises, even with a lot of resistance from the markets and politicians and so forth. And that actually convinced people that they were serious about controlling inflation, and that stabilized inflation expectations. And research shows that actually a key driver of inflation is inflation expectations. So they really got it right after making some early mistakes when they didn't raise rates till it was too late. But then they really turned it around. Now they're in a situation where they've gotten rates up. They also have convinced markets that they're serious. They have to keep on convincing markets they're serious. And the data has been a little bit better on inflation than we expected. So is inflation job done yet? No, inflation is still too high, particularly core inflation hasn't come down to levels that the Fed needs to see it coming down to. But there's now a real possibility that, in fact, the Fed basically has done enough. On the other hand, I actually lean to the view that they're probably going to have to raise rates more. But given the fact that there's been good progress, that the data has been pretty good, that they've actually did their job to convince people they're serious, and they're continuing to do that by actually emphasizing that they're not going to lower rates for quite a long time, even if they stop raising rates, all of that says that they can wait, that they can see how the data evolves. Because the key is that the Fed doesn't want to actually create unemployment as part of their job. What they want to do is they want to control inflation. And if they can control inflation without having to raise unemployment too much, that's a really good thing. So I think Powell's basically got it pretty much right in his Jackson Hole speech. So yes, I am a side, but the Fed has actually been doing its job pretty damn well. So I'm not uncomfortable where they are. I think it's more likely that they're going to have to raise in the future than not. But let's see how the data comes in.
I mean, it's like Goldilocks. If you could do what you just described, if you could dampen inflationary expectations without really raising unemployment or without really, having the economy hit a pretty tough speed bump, that would be. I don't think it's possible. But it has been so far. Let me ask you, Rick.
Yeah, I agree with you. I actually think it's unlikely that they're going to get away without having some kind of downturn. Probably not that severe. On the other hand, and they have actually indicated that they will keep fighting inflation even if recession occurs. But on the other hand, you don't have to drive it into recession. If there's a possibility that you can do it without, fantastic.
Right. And now I want to try and figure out why, because every time we get a GDP number, Atlanta Fed, or even the number itself, it's like, how is that possible given the 500 basis point increase that we saw? Every time on a Friday we get a first Friday of the month, we get a jobs number that just looks, it's surprisingly strong and surprisingly resilient. What do you attribute that to, Rick? Is it good things? Are there good growth things happening in this economy, or is it Keynesian? Is it just all the government spending that's in the pipe, all the legislation? I mean, now that the deficit is going to be $2 trillion this year, double last year. Is it just pure Keynesian stimulus that's keeping the economy afloat, or are there good things?
No, I think that I don't know whether good or bad, but I think the consumer has been much more positive in terms of their spending. So I think it's both. That there was a lot of fiscal expansion. In fact, I thought too much at an early stage, which I think helped lead to some of this inflation. So the consumer feeling pretty good. Came out of this recession. They came out of COVID with basically a good balance sheet, and they've been willing to spend. And this is just the way it is now. In general, by the way, there's always mysteries to what happens in the future. That forecasting is a very difficult process. Nobody ever really gets it right. And there are a lot of surprises and mysteries. In fact, that's one of the reasons why I became a macroeconomist. I like not knowing things so I can learn something. Not everybody has that attitude, but as a scholar, it's great to be that there's ignorance, and maybe you can contribute a little bit to understand how things work. And there's a lot of ignorance out there right now.